Asia remains a bright spot in the global economy. Our regional economic outlook forecasts that the growth in the region will hold steady at 5.6% in 2015 before slightly easing to 5.5% in 2016. Main driver of this steady growth is domestic demand, benefiting from low interest rate, low oil prices, and healthy labor market conditions. Performances are quite diverse within the region. China is slowing down, and we expect it to grow by 6.8% in 2015. For the first time in many years, China's growth rate is expected to be below 7%. But we would like to emphasize that this slowdown is actually a desirable adjustment to a more sustainable growth path in the medium term. Fortunately, India is picking up. We are expecting that India will grow by 7.5% in 2015 and 2016, making it as the fastest growing emerging economies in the world. Yes, we revised down our forecast for several natural resource exporters, such as Malaysia and Mongolia. There are several risks. First, weaker than expected slowdown in China and Japan can have negative impact on Asia's trade and growth. Second, asynchronous monetary policies in advanced economies can increase volatility in global financial market. And in particular, normalization of US monetary policy can increase global interest rate and further appreciate US dollar, which can negatively affect some countries with large domestic as well as foreign currency denominated debt. Third, slowdown of the potential GDP growth rate is not just a problem for advanced economies, and the trend is also manifest within the region. Considering the diversity of performance, it's not easy to find one-size-fits-all recommendations. But overall, considering the low inflation environment due to low oil prices, monetary policy needs to avoid being unintentionally too tight. I mean that the policymakers need to pay attention to prevent unnecessary high real interest rate. Macro-prudential policies can be used to safeguard against financial stability risk. And for countries with large deficit and debt, the effort for fiscal consolidation has to continue. And structural reform are essential to boost up potential GDP growth rate. So overall, unlike in the past where Asia countries enjoy higher growth rate, with the slowdown of the growth rate and the increasing financial market volatility, there is a little room to make a policy mistake. So I can say it's a time for alert.